Hello everyone, welcome back to another video in our Module 2.2 series, Finance and Asset Management Systems and Human Capital Management Systems. For this video, we will be tackling two enterprise systems. We will start first with Finance and Asset Management. Finance and asset management systems lie at the core of the organization, and companies are held fully accountable for the accuracy of their records. Asset management is concerned with the assets of your organization, such as your cash, your goods, and other resources. And finance management is concerned with the allocation of these resources. So the finance management system is mostly used by the financing department, and the asset management system is mostly used by the accounting department. Some of these terms may be new to you, such as accounts payable, accounts receivable, and procurement, unless you took up accounting in high school. But luckily for those who are taking management courses or those who are under PSMIS, will have a required accounting subject in your curriculum. So yeah. But in this information system, let's focus on that one. Accounts payable, accounts receivable, procurement, cash management, budget planning, asset management, and the overall general ledger. The general ledger is arguably the most important module for accountants. Are modules typically included in a full-featured financial system? So the features that you can see over here, the modules are included in this information system of finance management. The system may also support many other finance-related activities and processes such as collections, debt management, travel and expense management, installment payments, and contracts management. The most important feature, okay, the most important thing about this information system is integrating all these modules, integrating all these different functions of the system, such as accounts payable, general ledger, accounts receivable, financial reporting, together. Okay, that is the most important feature of this overall finance management information system. Integration among modules is especially important to avoid inconsistencies. For example, details from accounts receivable and accounts payable transactions should automatically update the general ledger used by accountants. This is to streamline reconciliation and consistent reporting. Bridges and interfaces to other systems also improve accuracy. So if you're able to bridge this finance management information system with other systems, it is also like a great deal to improve the accuracy of your records. Think about this as an example. The information system being used by the accounting department of the Ateneo. Okay, so the Ateneo accounting department have their own information system. Now the only information system that you are able to use currently, right, as a student is ISIS. And for all the classes you've enlisted through ISIS, the payment is still accurate, right? If you enroll in a class with a lab, or if you enroll in a 4-unit class or a 6-unit class, the payment is accurate, even though if you load rev, right? If you load rev, yes, if you paid before, you might have to change things with the accounting department, right? But your account is updated automatically whenever you enlist in a class, and so payments you make are accurate because ISIS, the information system used by students, is directly linked to the information system or the finance management system being used by the accounting department, right? So there's integration there. So their accounts receivable, their general ledger is automatically being updated. Also, the integration of these components support the development of streamlined and paperless workflows in an organization. Just in case you aren't familiar with the term streamline, streamline refers to it is to make a process more efficient and effective by employing faster or simpler working methods. So streamlining is you are trying to make it simpler, yet still very, very effective. Going back, humans are part of the workflow, making decisions, approving actions, and confirming steps in the process. All these players have real-time access to the same information. And so inconsistencies are highly unlikely in this type of information system. This is the value that the system gives to the organization, that inconsistencies in your general ledgers, your accounting books will rarely happen. Information systems generate detailed and summary reports on all the organization's transactions and assets. They generate exception reports. Exception reports were explained in the previous video, wherein reports are generated when there are anomalies in the data. This may detect inconsistencies, which may be theft, wherein someone is stealing stocks and assets of the organization, or anomalies may also just happen when someone inputted the wrong records, right? They may have made a mistake somewhere. Financial systems also carry the major burden of compliance reporting and must conform to local, national, and international regulations. So for filing of financial statements, your income taxes, so on and so forth, these must comply to the general reporting regulations of the local government and the national government. And so, information systems, um, the financial management information systems have already a structure on how to report these things. Okay, and with that ends our lesson on finance and asset management. Let's move on to the next one, human capital management. Human capital management systems are used mostly by the human resources department. This is the system used to track employee records and evaluate employee performances. It encompasses a growing suite of applications with the employee record as the central element. The Human Resources Management module or HRM module is the core of this system. It tracks each employee's demographic information, salary, their dependents, and all other information that is listed here. You can see it listed here. Demographic information, salary, tax data, benefits, titles, employment history, so on and so forth. Some systems also keep track of performance evaluations, professional development, and trainings that were undergone by your employees. The two submodules of the HRM, or of the Human Resources module, are workforce management and talent management. In workforce management, the system keeps track of the time and attendance, sick leaves, vacation leaves, and project or task assignments of the employees. This is mostly used for allocating which people to assign to projects and shifts, and to know the attendance and hours of your employees' work. Okay, so workforce management is to keep track of what projects people are doing, what shifts are they assigned to. It can also see a shift where no one is assigned to, so they're going to assign someone, so on and so forth. The next module is talent management. Talent management focuses on the employee life cycle, beginning with the recruitment phase and extending into performance evaluations, career development, compensation planning, e-learning, and succession planning after retirement or departure. Here, you can see the value of your employees. How much have they learned and contributed to your company, along with how much investment of resources have you put to this employee. Organizations are willing to invest resources or cash or time into trainings in order to train their employees for the long term. And here is where those are kept track of so they could see how valuable these employees are. An example is a friend of mine was just an entry level employee. He just graduated from computer science. He was an employee of DXC, but a condition was before he was able to work, he can study abroad. I think he was studying in California right now. He took up his master's in computer science, fully sponsored by DXC, the company that he worked for, right? But part of his contract is after he graduates, he has to work for DXC for X number of years. That is, and here in the talent management module is where they keep track of these types of instances. Okay, next. Buried in a human capital management system, information system, is a wealth of data that can reveal how well the organization is managing and nurturing its human capital. Human capital, again, refers to your employees. While metrics to quantify human performance or productivity can be controversial, right? It's like you're trying to measure what a human's capabilities is through a series of questions or series of metrics, rather. That's why it's controversial. These metrics are vitally important to an organization. When managers and staff work together to devise metrics that people agree are fair, relevant, and aligned with business goals, then everyone knows what to do and to improve. They also have a much clearer understanding of the organization's human capital and how best to deploy it. Though it must be clear that these metrics are not to target the individual's performance of an employee, right? But rather are geared towards the overall health of the organization. So here are an example of some metrics: your turnover time, your turnover costs, cost per hire, human capital, return on investment, and employee satisfaction. These metrics are usually found inside your human capital management information system. All right. And with that ends the video on finance and asset management and also human capital management. In the next video, we will tackle another enterprise system called supply chain management and customer relationship management. And that's all, and see you then.